Something remarkable is happening with Apple's stock today, and if you think this is just another routine market movement, you might want to think twice before scrolling past this one. Apple, trading under the ticker Apple on the Nasdaq, has seen its share price climb in today's session, and the reasons behind this upward momentum reveal something far deeper about where this technology giant stands in the current economic landscape. To understand why this matters, we need to peel back the layers and examine what's actually driving investor confidence right now. First, let's establish some important context. Apple is not just a technology company, it is, arguably, the most closely watched equity on the planet. When Apple moves, portfolios move. When Apple signals strength, it often telegraphs broader sentiment about consumer spending, global supply chains, and the health of the premium technology sector as a whole. So when we see the stock trending upward in a meaningful way, serious investors and analysts take notice immediately. The momentum we're seeing today appears to be rooted in a combination of factors that have been building beneath the surface for some time. Market participants have been closely monitoring Apple's ability to sustain its services revenue growth, a segment that has quietly transformed Apple from a hardware-dependent company into a diversified digital ecosystem. Services, which includes the App Store, Apple Music, iCloud, Apple TV+, and Apple Pay, now represents one of the highest margin revenue streams in the entire company's portfolio. Any indication that this segment continues its upward trajectory sends a powerful signal to institutional investors who are increasingly valuing Apple not just on iPhone sales cycles, but on its recurring revenue potential. There's also the broader macroeconomic picture that we cannot ignore. In an environment where interest rate expectations have shifted and investors are reassessing their positions in growth versus value stocks, Apple finds itself in an unusual and enviable position. It straddles both categories. It generates enormous free cash flow, maintains a fortress-level balance sheet, and continues to return capital to shareholders through buybacks and dividends at a pace that few companies in history have matched. When investors seek stability with growth potential, Apple consistently emerges as a primary destination for those funds. Additionally, there has been growing optimism surrounding Apple's long-term positioning in artificial intelligence. Unlike some competitors who have made AI the centerpiece of breathless marketing campaigns, Apple has taken a characteristically measured and deliberate approach, weaving intelligence features into its existing ecosystem through Apple Intelligence, its branded AI initiative. Investors who understand Apple's history know that the company rarely leads a technological revolution in terms of timing, but it has an almost unparalleled track record of leading in terms of execution, integration, and ultimately, monetization. That patient confidence is reflecting itself in today's price action. We should also consider the technical side of this movement. When a stock of Apple's magnitude breaks through certain resistance levels or reclaims key moving averages, it attracts algorithmic buying and momentum traders who amplify the initial move. This creates a self-reinforcing cycle that can sustain price appreciation beyond what the fundamental catalysts alone might suggest. The broader market environment today has also been constructive, with risk appetite returning among institutional players who had been sitting on the sidelines. And when that money comes back into the market, it does not always go into speculative names. Often, it flows back into the most trusted, most liquid, most fundamentally sound assets available. Apple is, for better or worse, the default destination for that capital. So here's the question that every investor watching today's move should be sitting with tonight. Is this upward move in Apple stock a reflection of the company's genuine long-term transformation, or are we simply watching the world's most powerful brand temporarily benefit from favorable winds that could shift again before the next earnings call?